I'm just going to talk about this particular trade. On the Aussie dollar, the original trade was stopped, and I put a buy stop and sell stop in here, not knowing which way it was going to go. It triggered the sell stop, and you see it's going the other way. But
Oh,
it's
shit.
hello, hello.
Yes.
Oh, okay. I thought someone was trying to say something.
Oh, no, I
So
was just laughing.
yeah, well, that's life. But the good thing about it is that what I can do now is do a hedge. So I'm going to leave this open and do a hedge, and then I'm going to talk about how to hedge your way out of something like this. You with me?
Yeah.
Yep.
So this will be something we can do on this. But my original assumption that we would get a bounce off the 74 was correct. It's just, as you know, no one can predict what the next candle is going to do, and the candle came down, hit the stop, never closed below the 74, which I thought was, a telltale thing. It never closed below 74, and now it's up 80 pips. See that? Well, it was up 80 pips. So it's 60 and change now. Oh no, I measured from the wrong spot. 60 and change now. So what I want to do is create a hedge. So you see, I have a buy stop at the other double zero. All right. I want to see how this broker reacts to the hedge. Um, I turned my trade copier off, but for some reason, this broker won't let me open another account. I wanted to open a separate account with a fresh 5,000 for the for doing the long term trades, but this is what I don't get this. These are two of my live accounts that are tied to this account. So if I take a trade in this one, it goes in into these. But the but for some reason, when I try to open a new demo, it won't let me open one. I'll just show you what happens. Maybe somebody knows what I'm missing here.
Do it from their website.
Well, if I go through the website, it's a whole. I got to fill out 8,000 things, like I'm starting all over again. And
Oh,
normally you could just go file, open an account, and you just open a new account. Now I don't know if the trade copier had anything to do with that. You know what I mean? But if I hit next, I just want to show you. I want to open a new demo. I go to next, and it gives all the information here, but I can't. It won't let me. It won't give me a currency, so I can't open a second account, which is
Is that
kind of
because you didn't
strange. And
put
I
your
didn't want to have to. I didn't want to download another instance of the broker, which is probably what I will have to do. But until I figure that out, I'm going to leave this for now, and I just want to make sure this hedge kicks in. Once the hedge kicks in, then we can hedge our way out. But again, going back to the original assumption, that bounce off the 74 was valid. It tagged us by a few pips, and then it tagged a sell order I put in yesterday where I was on my way out to the funeral, and I put in a sell stop and a buy stop and left. I didn't put stop losses in deliberately because I wanted to hedge it and make that part of the one of our exercises also. All right.
Yeah.
So on this particular pair, that we're just going to hold this and we're going to follow this exercise through.
You're stuck in a price trap there as well, aren't you?
Well, based off of this candle, yeah.
Yeah.
Okay, but this could bounce around. But again, I don't know what the right way to say this. My assumption about the 74 was correct, but my stops, as I've mentioned 100 times, my stops tend to be very tight,
Yeah.
and that in itself doesn't phase me so much. And we're
Mm.
still way, way, way under the $500 limit for these 100 pip and 200 pip trades. Is someone at the door? Give me a second, guys. Okay, guys, I'm back.
All right.
All right. So, for the sake of clarity, I want to show all this just so you understand the thinking process of it. I don't want to jump into something else until you know exactly what I want to do here, and this will be interesting to play the hedge out. So I want to review what we were going over yesterday. So let me just close this. And yeah, I'm just wondering if the trade copy has something to do with me not being able to open an account. And I'll figure that out after the class. I can't waste time with that. So I'm not going to worry about this until the hedge kicks in. Let's open up a clean chart. This was a wedge, that euro dollar we looked at the other day. And you see we had a close below, but the next candle is telling us it could be a fake out.
Yeah.
All right. So remember, on these breaks below, you always want to keep an eye out on those fakes. The next step. Oh, I have the 21 in here, so I'll just leave it here now. So what we're going to do now is look for setups based on the 21 day, based on inside bars and medium-sized bars. Excuse me. Based on inside bars and medium-sized bars. And I'm going to assume that this would be a fresh $5,000 account. And I use that number because it's a decent enough number to start an account with. You can actually start with 1,000, but with 1,000 you can't often split the trades enough times. You follow me?
Yeah.
So 2,500 is also a very good amount, but you won't get as many splits, but you could still do some splits and some other things. So we'll just.
When you say splits, hey Lou, when you say splits, what do you mean? You mean like several lots?
Okay. I'll give you a good example. I got to turn this off of a split. Let's take, let's look for something. Okay, let's take this wedge here. All right. And let's assume that this is our entry on the wedge. All right. And let's also assume that this is our projected take profit on the wedge. And remember, we measure the first touch on the back of the wedge. This touch doesn't count because this is the entrance to the wedge. Okay, this is the entrance to the first touch on the back. And we use the first touch on the back as a projection for where price will go. So then we move price, we move this to our entry, which would be the open of this candle. All right. And on this particular trading platform, when you create a trend line, you get these three fulcrum points that you can drag this around like that. All right.
Yeah. And use the middle one as your.
And the middle one could be where I would want to split the trade. So if I'm in this trade and I went in with a 0.5, when I get to this level, I can take half the trade off and I'd still have 0.25 running. You follow me on that?
Yeah, gotcha.
Always scale in, but the splitting,
Okay.
you know, you really need to start with a large enough lot size that will allow you a split or two. And if you remember on these
Cool.
wedges, go ahead.
No. I said cool. Yeah, because I understand it's splitting and scaling out are the same thing.
Right. And if you remember on these wedges, the your stop loss goes on the last touch on the back side of the wedge. Okay, and I think that was you I was explaining that to, Andre. Someone asked why not some of the other candles, and this back touch may be preceded by a number of smaller candles that don't touch the back. But if we see an example, I'll show you that.
That's good. Yeah. So that's good to know. So you always put your stop loss on the last touch.
Correct. All right.
Cool.
That's one thing that we look for, and how we verify this. So let me put my RSI in, insert indicator. oscillators. And I use an RSI 8 in part because of the the Fibonacci number or whatever. All right. And again, let me do this way. Let me blow this up. And let's go over here. And let me move this over just a touch. I don't want to see the next candle. Okay, there. So now I'm just going to do an F12 till we get into that area of the wedge. F12 moves the chart over one candle at a time. All right. So there's our breakout. All right, that's all we see. We have a close below the lower part of the trend line. So now I want to come back and find my last two swing points on the RSI, and I want to put a trend line across them and carry them through like that. All right, and I'm using these 2 points. And what I want is a close below the trend line on the RSI and the RSI to be below 50. And that gives me a very, very high confidence in this short trade.
Okay. Cool.
All right, and then my stop is right there, right at the last touch plus the spread. Okay, so last touch plus the spread.
Okay.
All right, that's my
Cool.
stop loss. Now if I go F12 and go one candle forward, you'll see I didn't get a fake out here. Now I'll explain the fake out in a second. I've explained it before, but again, if this is all you can see and you want to be aggressive and jump this trade, you could take it on this trend line break. Got me? If you want to be more moderate, wait for the next candle and see what the next candle does. If the next candle does not close back inside the triangle, then you can enter anywhere in that candle you want. I hit backspace instead of F12. Okay, that's just the way it is today, huh? And as you can see, with the stop loss, we were in good shape.
Lou.
Go ahead, Daryl. What was that?
Okay, so in regards to that RSI trend line break, okay, I mean, technically it broke to the top, is what I'm seeing.
Right, but the candle didn't close above the top trend line.
Okay.
Okay, you have to look first for the candle to close below the bottom trend line or close above the top trend line, not a wick. We don't want the wick. We want the candle body to close above that upper trend line or close below the lower trend line.
Okay.
Okay, then when it closes, you want to see, okay, is RSI telling me that this is going to go short? And a couple of ways of doing it is just to take a quick glance at RSI. If RSI, like in this area, is all the way below the 50 level, well, I don't want to say it that way, but you damn near don't need anything but your naked eye to take trades. Once RSI gets this far down and stays down there on the daily chart, you could take every conditional candle and not even worry about the wedge. See that? If I just mark the conditional candles, that's a separate way to trade that I'll get into, and it's got a little bit different thing than RSI. But just to show you, if the RSI is solidly below zero, every conditional candle could be a potential trade. And I'm just sliding this over every conditional candle so you see what I mean. RSI is under zero and has stayed there. So that RSI 8 on the higher time frame charts gives you a very, very powerful representation of the general mood and trend of the market. All right. So the first thing we look for is a close below, and then we want to confirm it with the RSI being below the 50 and having broken a trend line. So your observation here was very good, Daryl. Yes, that this did break to the top side, but the candle was going the opposite way.
Lou.
Yeah.
Lou, what is the difference between a conditional candle and a momentum candle?
Conditional candles primarily are candles that close more than 50% into the prior candle's body. Momentum candles tend to have very short wicks, and they close closer to their low or high than they do to their middle.
Okay. So one
All right.
doesn't
So,
involve the
I
previous
just want
candle,
you to
the
see.
other one does.
Say that again.
The conditional candle involves the previous candle and closing 50% into it, whereas the momentum candle just has very little tail and closes at the extreme end of one or the other.
Yeah, basically, yeah. Most of these are called dragonflies. If you look in some of the other books, they're called dragonflies. But my intent on the momentum candle is that this candle was a solid white candle at one point. Okay, because this was the high of that candle. So if that was the high, then this candle was a solid white candle. And prices, the buyers and sellers pushed this candle all the way down to the point where it closed closer to its low than it did to its middle. And I use the middle. Other people say close closer to the low than it did to the high, but I prefer the middle. All right.
Okay.
And generally, in many cases, the next candle is going to go in the direction of the momentum candle, particularly when you have an established trend. All right. That's the difference between the two. All right. So what we're going to do now is, now here's a good example of the, let me draw this trend line break here on this. And here's where we would wait. Right there. Here's our close. And there's our, well, we don't actually have a close below this trend line yet. All right. So we don't have, at the close of this candle, and I have to be clear about this. At the close of this candle, this elbow was right there, just barely below that trend line break. Now, an aggressive trade, you could take that if that's how you want to play it. And the moderate entry would be to wait for this candle. Wait for the second candle to make sure it's not a fake out. And usually, I prefer to take trades on wedges when they're in about the last quarter of the wedge or more in this area. If I could break this wedge into 4 boxes, let me see, that would be box number 1 to be on this candle. Oh, I can't do, okay, there we go. And now I'll do a box number 2 would be on this black candle. And then the other box would be on that white candle there. So that's pretty close by eye. I almost got it. I like to take the wedge breaks at the last quarter of the wedge because you can still get another bounce up to the top and another drop back down here. So when you get a break in the middle, I would prefer to wait to see if it's a fake out. You got me?
Yeah, particularly on the daily, because you can have like 200 or 300 pips, can't you, between the top and bottom lines?
Oh, absolutely, yes.
Halfway through the wedge.
Yep. Yeah. And remember, many times the fake out goes right back in the opposite direction, and we've seen that over and over and over again, where the fake out, you'll get a fake out on a channel, and that fake out will go all the way to the other side of the channel.
Yeah.
All right. So.
Hey, Lou,
Yeah, go ahead.
I'm sorry. Is there a strategy in which you play the wedge bouncing off the support and resistance until it actually breaks? Or
Yeah,
is that too risky?
If you want to do that, but then which indicator is designed? Now remember, bouncing back and forward, you're basically in a channel. Okay, it's a descending channel. You follow me? On a wedge, because we're compressing. It's a compressed channel. So if you're in a channel or a sideways market, which indicator was designed, or which indicator works best in that type of market?
Is that as good as stochastic?
What was that? Your daughter answered for you.
Is that? Oh yeah.
What?
I forgot. I can't forget to pronounce it. Stochastic.
Stochastics, yes.
Stochastic.
Right. So let's put the stochastics in here, just in case you wanted to play the bounce off the wedge. Insert. Oh, indicators. I'll leave it at 533 for the moment. And what you like to have, now remember, this one doesn't count. This is the first.
What was that number on your stochastic?
533.
Okay.
All right, so this one doesn't count. Okay, so you want everything after this point, and this would be your first actual trade you'd be looking at right here. Now here, the stochastics didn't get to overbought or oversold on either side of this, but you do have a couple of things here you can look at, and you've got the momentum candle here. The second one is a bit of a warning candle because that candle body would fit right inside this wick. Do you follow that?
Doji, right?
Excuse me?
That's a doji candle? That's a doji candle.
Yeah, this is a doji. Well, yeah, close to a doji. It's got a little bit of a body, but it's a doji.
Right.
So yeah, you can look at that, and then you see you've got the stochastic cross right here at the close of this candle that touches the extreme. You could certainly take that with a smaller lot size because it's not an A+ trade. Same thing down here. Now here you've got a little more of a confirmation. By the time this taps right down in here, we're making this curl up. And again, I wish I could show it to you live because it looks a little bit different than this live. But you get the idea. Okay, we approached oversold here. So you're waiting now for this touch. You follow me on that, Andre?
Yeah.
Okay. So then on this touch, you can certainly take a shot back to the center of the wedge. And remember, it's a daily candle, so there's some meat in there, like about 150 pips. Okay.
150 pips to the midpoint.
Yeah, to the midpoint, yes.
Okay, that was a Monday, so that was a big gap.
This was a Monday.
Yeah.
Okay. And it filled the gap, obviously. We have another gap here, too.
Okay, so we wouldn't have been able to trade that, right? Because that would have been a gap.
No. Because it was a Monday, a lot of this may have happened on Sunday night. And we may have come to the market Monday right here at the close of this candle.
Right.
Do you follow me? So if he's saying this was a gap, I'd have to go back to a lower time frame and hunt it down. But I get what he's saying.
Well, it opened on Monday at the opening price of that white candle, because that's a Monday. This isn't a 6-day broker. Follow me on that?
Yeah, you're saying it opened here.
Yeah.
Well, oh wait, so where's the gap?
Oh, this is not a 6-day broker, meaning that it only tracks price from Monday through Friday.
Yeah, you don't get a Sunday candle.
And the Sunday candle wouldn't be any different price anyways, because they don't show open on the weekends. Oanda used to, but not anymore. All right, I'm done.
Okay, no, I just want to make sure that you got your point out.
Okay.
All right, so we understand what we're looking at here with the wedges. And again, if you're having trouble seeing the wedges or any other formation, go to a line chart and then draw the line charts through the dominance. And let me just clean this up here. So you draw it on the line chart and then you throw your candles in. All right, and here you see we had this showed up better. The fake out showed up better here.
Yeah.
Okay, and remember the fake out usually comes back the opposite way. So we need to see what's going to happen at the close of this candle. Okay. So what we'll do now, first we'll make a quick scan, and we're going to look for wedges on the daily charts. And we're going to go for these first. We're going to stop with the Aussie New Zealand. All right. And let me close these so we don't look at those until we need them. All right, so we're going to look at pound dollar, and all we're looking for now are possible wedges. This is still forming, so you can't really draw one on there. Let me squeeze this in a bit. Okay, I see other things, but we're only looking for the wedges. You got me? Let me go to a 4-hour. Okay, so nothing there. All right, so we're done. Euro dollar we just looked at. Let's look at dollar chef. Again, this is still forming. This would make a decent bottom of the wedge, but we don't have anything that we could really say would be an established top. Maybe this right through here. See that right where we are now?
Yeah.
All right, so we could look at this, put it on the watch list, if nothing else, and look for the break above. Now that we have that, let's see what our RSI is doing. Oh, here it is. So for a break long, we look for our last 2 points, which is right there, these two guys. You got me? So let's see if this breaks this, if this closes up above here by the end of the day, RSI should poke its nose up, and then we may have a potential long trade there. So I don't have a Word doc open, but I usually put this on a Word doc. Let me just open up one and put it on the side. And that's what that other spreadsheet was for too, by the way. That spreadsheet that my Abraham built. Okay, so this is okay. That's on the watch list, and it's a
Talking
wedge.
about the daily spreadsheet, the daily pip gain spreadsheet that we were talking about before.
No, I'll show you the one I'm speaking of. Hang on. I want to make sure I get the right one. That would be this spreadsheet, and I believe you guys have this.
Yeah.
No.
You don't? Oh, you may not.
I don't.
But I have to talk to you after the class and get you set up with a couple of things and some indicators and stuff. And I think
Okay.
Sean was asking me for something in the Skype room also. And I'll have that, the new password and all that, and the new Skype chat set up
Skype room.
tomorrow.
Cool.
The journal. Go ahead. Someone was going to ask me a question.
No, I think it was me. I just said cool.
Okay. So here's the journal. All right. And if you remember, I showed you this, and now you don't have to get as involved with this because MetaTrader 4 logs all of this information. But this guy, he just happened to like the, all of the technical end of it. He was a mechanic, so I guess he had a technical mind. And I said, okay, if we're going to build it, let's just throw everything in. That's why you have take profit 1, take profit 2, take profit 3, because we would split these trades was the other exercise that we did. And here we had a trailing stop. Okay, and we included the swap and price. Whatever we could put in, let's just put it all in. Then on this last page is the watch list. You put your pair, your time frame. So in this case, in pair, it would be USD CHF, and then the time frame was daily, and then profile was a wedge. Got me? Or I need to put another letter in here so it centers. Oh. It didn't center. Okay, that's a quirk I got to take a look at. Anyway, but you get the idea, and then you come back and you can always have this open. I prefer just to keep the list of the pairs on a Word doc. All right, so let's go to the chef. Oh, I like this. Take this one way back here and grab this right there across those bottoms, and that's a USD Chef Daily. So let me just put that on the watch list. What is that? Oh, Euro Chef. I'm sorry. Also, keep in mind with these longer term trades, 8 or 10 pip spread, don't let it bother you because we're looking for much bigger numbers. All right, so keep that in mind. And we're in the.
So when this one,
go ahead.
So when this one, we're gonna have a hedging strategy where we have 2 orders, one at each wedge.
No, this is a wedge. You actually have to. It's a daily, so you just come back at the end of the day and see if the candle closed below the wedge or not.
Oh, gotcha. Okay.
Yeah, so there's no need to do a hedge. A hedge is what you use when you get yourself in a situation, or like, something that happened with that Aussie dollar trade. All right.
Right. I think I misspoke. When I said hedge, I was really talking about a straddle. When you're not sure which
Well,
side is going to go, you want to have an order on both sides. But no, that's not what we're doing. We're just doing a
right.
wedge.
Yeah. Well, the first thing is we have to get a close above or below the top or bottom of the wedge. So there's no guesswork in that. It's real easy to see, real easy to know whether or not you have an actual close.
Yep.
All right. So now we're going to go euro pound. That's more of a channel than a wedge. Yeah, if I draw, because I like the last dominant close, as you know, and this is more like a channel, which we're not going to do this week. See that?
On a line chart, that would look like a false breakout, though, right?
Let's make it a line chart. A false breakout. I'll put that there. Yeah, if we did the line chart the way I like to do them, it would kind of look like that, and that's a fake out right there. That's a fake out. If I bring the candles back in, see that? We closed above, next candle. Oh, well, it didn't quite close back in, but you get the idea. And if I clean
That's
this
not a
up,
wedge.
yeah, it's kind of a wedge. But the only thing I don't like is I'm cutting through the middle of this candle. I don't like
Yeah.
cutting through the middle of a candle to make a wedge.
Well, but you remember that was that Monday open
Yeah,
with big gap.
but it's here, and so I have to put my line there.
Okay.
You know what I'm saying?
I thought of that as it didn't close below the line.
No, 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 no. Uh, I'll cut through the middle of a candle. I'll cut through the middle of a wick, like I do here and here. But I never cut through the middle of a candle to make a wedge look physically correct.
Okay.
All right, so I'm going to stay off of this. And the
No,
fact that, go ahead, Tone.
No, it's Mike. Are you
Mike.
not cutting through the middle of the candle on the top?
No, the bottom. No,
On the top, right there.
the middle of this. We made this a line chart, and then we just drew to the tops of the lines here. We don't know what kind of candle this is. We just know it's a fake out. Now, when we put the candles back in, if I wanted to clean this line up, then I'd put this line at that last dominant close. Because you see that last dominant close caught this right to the tick.
Mm-hmm.
You're like, if you Mike, that exercise was, if you can't really see wedges with candles, then make it a line chart, and some people find it easier to see the wedges that way.
Yeah, I get much worse on a line chart.
Okay, well then don't worry about it. Okay, so now and the other thing too is the amount of time we had to talk about this and analyze it means we don't have a wedge. You follow me? You should be able to see it. It should be clean and simple. If we have to spend that much time, move on. Because we could look at 8 or 9 other pairs. And well, this wedge is gone already, but I'll draw where it was, basically like that. Oh, I got the wrong one. That was basically this. And this is probably a fake out, Mike, meaning that a candle closed and then price came right back inside again. Did it on the second candle. But you see that? Those little shark fins are really fake outs.
You wouldn't have
But
taken
you'd still have to move it up, right?
Yeah, I would clean it up. Now that it's a, what do you call it, chart, I would clean it up. But this would be the last dominant close here, this one or this one. So even if I
What's wrong
cleaned
with
it
the
up and
next
put it.
one? But you're penetrating those candles.
No. I'm not penetrating the candle. What you got to realize is that when this is a line chart, I'm drawing this across the lines. I'm drawing it across this dominant point. You follow me?
How can
And
that
following
be a
it
dominant
across.
point when there's a higher one right after it?
Yeah, because that's usually a fake out. And that's something that you'll see as you practice with this enough. You got me? And as you mentioned, you're not good with the line chart, so I wouldn't try to figure it all out right at this moment.
Yeah.
You'd have to practice more with it.
When I do the candles, I get very different wedges than you do.
I understand. It's just you see things spatially differently. Now down here, then this I would clean up to here and here are the last two dominant lows. So this would come here. I'd put this here, and then I'd clean this up to here.
Even though it's still...
Remember, I don't cut through when I draw my line, I don't like to cut through the center of a candle unless it's, you'll see an obvious fake out. And again, I'm always looking at the last dominant close, which is important. But I wouldn't worry about, Mike. It may be one of those things that you may have some issue with. But that wedge is gone, but I just want you to see that our RSI confirmed our close below. And we had our trend line break below.
I think this is why I get so much trouble is I seem to see everything different than anybody else.
Okay, well.
Hey, Mike, can I
that's a
make
good
a
thing.
suggestion? Hey, Lou, can I make a suggestion?
Yeah.
Mike, I kind of see what you see in a sense. So what actually Lou helped me in the past kind of see it the way he sees it as well is if you look at the very first dominant candle, Lou, can you move your mouse to the very first dominant candle?
Right here?
Right there. Now see that you have a body and you have a wick, right? So when you connect the actual body, and then yes, the very next candle, the very next dominant candle, it actually cuts through it, and then you have that cluster of 3 candles. But then when you look at your ending point, like when I do this, I look at the beginning, which is the first candle, I skip the middle part, and then I'll go to the end part where his mouse is at, and I'll connect those bodies. Then I'll back up to the middle and start to see, do I need to make adjustments? And usually that's what he's saying, that you kind of get like a better spatial visual of fake outs, whereas you have spikes in the middle, but you don't follow those spikes. You follow the dominant pattern. So in this case, we have, I move my mouse around, but we have one dominant pattern, and then we have a cluster of 5 other dominant patterns on the opposite side. So you can kind of negate that.
I'm gonna give you the mouse, Andre, for a second here.
Okay. So I always start. I mean, this is what Lou taught me about a year ago. I look at to draw the line. I go to the first one and I skip over to the end. So that gives me my basis. At that point, I'm going to cut through potential candles, and now I can decide, because I have 5 dominant touch points here and 1 dominant touch point, I can sit there and negate this one, because that one is telling me it's a fake out, which in this case, it happens to be a fake out. And that kind of helps me, because sometimes it's like, well, how do you know you're not just making a line where you want to see it? And if I'm going to apply some type of rule, if I have to apply a rule that's going to always be applied, you go to the beginning, you go to the end, you want to find support of multiple touch points, and then I can comfortably cancel out any spikes.
Look on where you started this one here on the top. You started at the right there and ignored the body, or ignored the tail, but on the bottom he didn't use the body, he used the tail. Right. So what I come back with is there is no such rule, because you kind of go back and forth on whatever your mind wants to see.
No. Yeah, make it a line chart again. And understand something. This is something that you may have trouble with. If I took this from here to there, then went back to candles, I'm at the bottom of this candle.
Right.
But you follow me? But
it's a 3-step process.
Mike, it's causing me to cut through this particular candle.
But the top one's cutting through a candle too, and you're okay with that one.
No, I'm not okay with that one. No. You don't understand where I started the line, Mike, is here.
Right.
And as you said, Mike, this may not be something that you should concentrate on.
Well, I've got to come up with something. I mean, I've tried inside bars, I get them wrong. I get channels wrong. I get triangles wrong. I get support and resistance wrong. There's got to be something that I can do.
I think once we did this, like we started with the line, we got to the beginning. We started here. We literally touched this point to that point. So right off the bat, what everybody in the room can see, this is the first dominant point from this point, and this is the last dominant point. You see that, right?
No, because I see a bigger dominant point right in the middle.
Andre,
Yeah.
we can deal with this in the Skype chat, but I've got like till
Okay.
10 o'clock,
Got you.
and I
Okay.
want to run down
All
the
right.
rest of these pairs. So
Okay.
we'll try to clear this up a little bit in the
Yeah.
Skype chat, Mike. But I
All right.
believe that this type of spatial thing may not work for you. So I wouldn't
Did you
concern
ever
myself.
come
I
up
would
with
just
anything
absorb
that
as much
might?
as you can, and then one day it may click for you.
Yeah.
Right?
All right. Well, I'll wait until we get a chance to meet privately, I guess. You
Okay.
were, I don't
So
know.
I'm looking for a wedge here. Let's go to a line chart. I see the wedge, but I'm going to go to the line chart. I'm going to draw across these guys like that. Okay. And then I'm going to go across this. Okay. Everyone agree with these lines?
Yep.
Okay. Now I go back to the candles. And now you see from here, I can clean this up a little bit. I can catch this last dominant high right here, bring that right there. And now this is a workable wedge.
Yep.
Okay. And this is euro yen. So now all on the euro pairs, we may see EUR JPY. And then okay, so that's 3 on the list. Let's go to Aussie dollar. We know we've got that other thing going on. Dollar CAD. It's kind of a big ugly wedge. That would be this, kind of like that, all the way out to here.
Flat top one, yeah.
Yeah, flat top. It's a little ugly for me.
Yeah.
Let me put this
Right.
line up at the last dominant close. But since it's a daily candle, I only have to look at it at the end of the day. It's worth putting on the list.
Yeah.
You follow me?
Yeah.
Let me go down to an H4, see if there's something cleaner there. It's pretty much going to be the same thing. Yeah, that's just massive ugly. And I also want to go back to the weekly on this. Okay, so we have been higher than this wedge before.
Ooh, cup with handle.
Yeah, cup and handle too. You see that? There's the cup, and this pullback right here is the handle. And normally this will go up and extend.
It's going up big time.
Yeah, this will normally extend itself this length.
Yeah.
And I'll just go into that briefly. I can't draw a cup with this MetaTrader thing, but did you guys see how this is a rounded bottom?
Yeah.
Okay, no, some guys may not. It's something they may not have been taught to look for. This is a rounded bottom. Prices took a long time to turn around and make this change. Then it met a high, double top, and let me get this out of the way. This pullback is called the handle of the cup. And usually this pullback will lead into a trade that will go up about this length.
Yeah.
You see that, guys? Or if you want to measure it the more traditional way, I can't think of the name of the guy that does it this way, but I'm giving him credit. You'd measure the height of the cup, and then you'd want to extend that out like that.
Yeah.
And we've been this high before.
Yeah.
Okay, damn near to the tick.
Right up to a double top again.
Yep, right to another double top.
So amazing.
Okay, so that was a bit of a segue, but it was worth it because once he saw, I didn't see it, and then he mentioned it. It's like, oh yeah, that could be some money. Okay, so we'll put this on the list.
Yeah, that's definitely one for the list.
And dollar CAD weekly, and I'm going to put I'm going to go dollar CAD USD CAD weekly cup and handle and daily wedge. Okay, so that's on the list. Let's go to New Zealand dollar. No, that's a weekly. Nothing there. No wedge. All right, so you move on.
Yeah.
Remember, all we're looking for are the wedges. That's all we're looking for right now. And I thought I saw some possibility here. Let's make it a line chart so you guys get used to seeing that exercise. I see them, you know what I mean? But it's better to do it this way. Okay, I'm going to leave that. there, and then I'll look at this current candle and see if I need to adjust it. And then I'm going to go across this. And now I bring my candles back in, and this candle is still moving. So we'll see what happens here. This is a breakout. You know,
Yeah.
even if I clean this up a little bit and make this out to this dominant.
Yeah, it's still a breakout.
Yep, that's a breakout. So let's open this up. So now we want to see if this is going to come back inside this wedge. You follow me? And we've got the trend line break on the RSI, so that's all good. Okay, so at the breakout of the wedge, top of the wedge, we have a trend line break on our RSI 8. All right, and now we're watching this. Hopefully this will come back and just tap this. And then what we can do is place a pending order right above this high. You follow me? To get us in the trade. I just want to go out to a weekly and see if there's room above the top. Because if this is an all-time high, then I'm a little more cautious. If we've ever been this high before, then I say, well, we've got room. Okay, so we've got a little room up to the top. It's been 1999 since it's been there.
Yeah.
But there is some room.
Yeah.
Okay. So remember, if this was an all-time high, I'd be a little bit cautious. I'd still take the ride up with it. But, you know, you don't know where it's going to cap out and say, okay, that's enough. And that's my, you know, particular take on it. So this is dollar yen daily is on the list also. Okay. And that's the beauty of keeping an eye out for the fake out, because I don't have to jump on this right this minute. All right. And our projected profit target on this would be, remember, this touch doesn't count. This is how we got into the wedge. And then this becomes our potential take profit point. And I'll bring that out here. And then copy one, bring it out here. And then copy one down to the bottom, which doesn't look like much, but again, we're talking 600 pips. All right. So that's worth looking at. Okay, so then pound yen may be similar. Daily, nothing on pound yen. Move on. Chef yen. Nothing there really. Pound chef. I'm liking this. So pound chef and euro chef are going to be similar, obviously, because the chef is a cross pair. All right. And I would come across here for the high. Like that. We can put pound chef on the list. And let me make this a line chart, by the way, first. So you can see you see how it matches up, where I would have drawn my dominant lines. Let me bring this down here, bring that up there. Bring this up just a hair. And then when I put my candles in, then I can modify it a bit. All right. So then I want to catch this bottom here. I just want to show you the modification. That's good. That's good. And this we can bring up just a hair. All right. So pound chef daily and wedge. Okay, let's look at Euro Aussie. Nothing there. Euro CAD. Nothing. If I say nothing there and you see something, you know, speak up. But I don't really see anything obvious. It's got to really show itself. Here's one. This looks pretty good. This would be our bottom, like that. Oh, let's make it a line chart. Let me get rid of this line. Line chart. Who farted? That sounded like a seat of the pants fart. All right, and then this would be my dominant line would be out here like that. So this has a way to go before it really registers anything for us. Everybody okay with these lines?
Yeah.
All right, then we bring our
I
candles
just have a
in.
quick, I just have a quick question.
Yeah.
Why is that second line as compared to the line just before it?
This one?
Does it matter? No.
Oh, well,
Yeah,
I could go out. Well, I could go out to this one, but since they're the same, I
Okay,
can't
gotcha.
trade anything
Okay.
back here. I'd rather get the two closest ones.
Yep. That answered it. Okay. So basically, you could have. It's just that it makes sense to do the most recent
Right.
trading
Yeah.
opportunity.
I mean, I could even take this all the way out to this one if that's what you want to do.
No. Right.
Yeah, but that's, it skews it too much. And now I put my candles in, and you see here the fake out, close above. Well, not quite. This one is kind of borderline.
Yeah.
All right. So this has a way to go yet. And then I bring this down to this dominant close here. You see that? And that's, again, I don't like to cut through the middle of candles when they have a real distinct dominant point. And this would be our dominant high up here if we wanted to clean that up and bring that up there. Because this dominant high catches these wicks right to the tick, catches these right to the tick. So dollar CAD, we'll put that, Aussie CAD we'll put on the list. And this is a daily wedge. Once you do this on your own a few times, this process flies. Nothing there. New Zealand yen, nothing there. Pound CAD, nothing there. Pound New Zealand, nothing there. Pound Aussie, nothing there. Aussie New Zealand, nothing there either. Okay, so this is our watch list. So at the end of the day today, and for the rest of the week, we'll come and we'll watch where the candles are closing on these wedges. And remember, on the dollar CAD, we have a weekly cup and handle and a daily wedge. We can keep an eye out on either one of them. All right. Now, the other thing to keep in mind on the fundamental side is that if this deal with Iran is okayed by the powers that be, Iran will be able to sell its oil on the open market. And they have been so severely hurt by sanctions that they're going to try to they're going to price their oil attractively, okay, which will drive the price of oil down. So keep in mind your oil producing countries like Canada and Australia. Australia also produces quite a bit of gold. But I'll stick with Canada for the moment. So keep in mind that may have a strong effect on the Canadian dollar. Okay. So this is our watch list. So what makes this nice and easy, we come back just once a day and we can check these. All right.
What's a good time? What's a good time to check this? It doesn't really matter. Like, what time do you recommend? What time are you gonna check?
I usually like to check at the end of the day, but we're not together at the end of the day. So I'm doing the exercise, now, which is valid because if we find a wedge that's not completely ready for a setup, it may take 3 or 4 or 5 days for it to actually give us a trade. You follow me?
Yeah.
Okay, so now we've got something we can look at the end of the day and look for potential trades. And almost all of these are going to be 100 pip or better trades when they kick in.
Lou, would you mind showing that Word doc again?
Oh, sure. And these are all daily unless I added the extra note like on the dollar CAD.
Okay.
Hey, look, what you could do is cut and paste that and paste it into the go-to-meeting chat so everybody can be able to just copy it.
Well, I'm just going to drop it in the the Skype chat.
Oh yeah, there you go.
Okay.
Are you in the Skype chat yet, Andre?
No, remember you have to
Oh,
Jeff,
what
you
I'm
said you
going
were
to
going to
do,
close that
no, I
chat and then
found a
open
way
another
to,
one.
to add you. Hang on a
Okay.
second. Um, shoot. Where's the thing? Copy conversation link. I don't want that. Leave conversation. Make link for people to join. That's what I did, but where the hell is the link? No, that's go to meeting. That's not the link I want. Where's the link to join the chat? Oh, let me show you guys what you guys see this?
Yep.
Yeah.
I just had the link the other day. And where
Oh,
the
that
hell
was
did it
for the
go?
other room.
That's it. Oh, copy. Hit the
That
No.
arrow.
was for
Maybe
the
that.
other room, Lou.
What's that?
That was for the newer room.
Oh, for the newer, yeah, but I'll figure it out. I'll send you a link, Andre, so you could join the new room. I'm going to make a new room anyway, so
Okay.
it's neither here
Okay.
nor there. All right, so
Cool.
now I'm gonna move this out of the way, okay? So now that we've done this, the next thing we're going to look at, and we're going to do this on daily and 4 hour. And let me get rid of all these lines. Now, oh, okay, I got to go back and tell you one other thing. And again, this is how I do it, and I'm not suggesting everybody else do it. But once you have this list, you go back to your platform, and then you go Control F5, and you get a brand new setup, and then you open up these charts in this. Did you follow me, guys?
Yeah.
And then you go File, Save As. No. It's File. It's Save Profile As. It's File, Profiles, then Save As, and then your profile name could be Daily or whatever you want to call it. Then click OK. Then anytime you want to bring up that batch of charts, you just you open the profile. And the reason for that is when we draw the lines on the Dollar Chef and all this, remember, we're just dragging this over to the next chart. You got me? So you may not have, when you come back, these lines may be gone because we may have erased them or whatever. So this way, when you draw a line on a Dollar Chef wedge, every time you go and bring that profile up, those lines will be there for you. So you don't have to redraw them. All right? So let's, I'll just go through this for a minute. The first thing I personally like to do is make all the charts BW clean. Okay, here we go. I have a platform that's a clean, someone making popcorn back there. And I got to get this trade copy of things straightened out too. BW clean. Because I want to make some of that money back. So, okay, Dollar Chef is the first one. Euro Chef is the second one. And Euro Yen is the third one. Where's Euro Yen? Am I looking right past it? Oh, there it is. Yeah. Okay. Then I'm just going to do these three, but you get the idea. And then let me open this up. Go to a daily. And what is this? Dollar Chef Daily. Squeeze this in a little bit. And we still got that mess there. So now I can draw this in there. Bring this up. And like that. And that's always there. You got me? So file, save as, profiles. Save as, and I'll just say daily charts. Daily wedges. So I'll leave that for now because I don't want to waste a lot of time doing the cosmetic work. But you get the idea.
On that last chart, could I ask a question or two?
On this one.
Yeah. So, why don't you give me the mouse there, please?
Okay, yeah. Well, just one sec. Mouse, and I have to straighten it out with Andre. Okay, go. You got it.
Okay.
I'm just reading something Rob wrote. I didn't catch it before. Okay.
All right. Okay, here we go. So, I also see this.
Well, that's gone.
Well, yeah, it's gone. But I mean, okay, yeah, okay, so it's gone. However, also there's probably, I guess, not enough hits on the lines in order to make it much of a valid triangle there. Yeah.
Right.
Okay.
Well, anytime you're unsure, post a picture in a room, and remember, you have all day. You don't have to rush in any of this. So post what you think is a wedge, post it in the room, and then we'll all pitch in and help clean it up or whatever.
Beat me up. Okay, I understood.
Yeah, so you got plenty of time.
Look, go back to the line.
What was that?
So you can see, go back to the line of that chart. Just
Oh,
so you
yeah.
can see.
Okay. So you see, basically, I'm coming from these two down to this one. Let me just bring this down like that. Connecting this one with this one. Oh, I got to make this shorter. Okay, from here to here. All right. And then this bottom one, I got to bring up a little bit. Bottom one can go right about there, actually, because this is a fake out. But again, I'm drawing it like this. Then I bring the candles in, and then I clean it up. You see? So now I'm looking for the last dominant close on this line is right there. I bring that down to there. Okay?
Okay.
All right. And then this I bring up to this high. And again, remember, this is normally done at the end of the day, but because at the end of the day, this candle is finished doing its thing, and we can make a better assessment. But this isn't broken out yet anyway, so that's how I set this up. So then you can have one profile for wedges, one for channels, one for the grid, and it makes it real easy because every time you go to that profile, you're only looking at that one issue. And this is how you can cover a bunch of pairs in one time and really, really generate some pips, and as long as you keep your money management in line. Damn. 10 o'clock. Okay, so we did the wedges. Let me go back, Control F5. Let me just make the loop and get back to where we were. Because what I wanted to do was to take another run down. Where was that chart we were working with? Aussie, New Zealand, right here. And objects list. Let's just clean all of this up. We can redraw all the lines later and delete. So the next thing I'm going to do now is I'm going to start at the top again. And the only thing I'm looking for are price traps. You got me?
Yep.
And it's real easy. And so it doesn't take you nothing. If I miss something, you tell me. We got this one right here on a daily. I'm going to keep an eye on it, but I would like to catch a smaller one in here somewhere because this is a 300 pip stop.
Yeah, it's a bit big.
You got me? But it's there. So I would put that on the list. I'm not going to write it now. I want to do a bunch of these because my time is, we've got one here. No, because this one broke out below, so we don't really have one. Now you could do a range in here too if you want, but I only want to do the price trap. And if I were to do a range, the range would be that candle high and that candle low. See, that's a decent range. but it's not a traditional price trap. You got me? I only want to do the traditional price traps, but I did want to show that concept. Um, Euro Chef. Whoa, what is that now? You guys see that? Am I doing something wrong here? Euro Chef. Why won't that come over?
I've had that with FX Team. I had to restart the platform.
Oh shit.
Yeah.
Okay, it's 10 o'clock, and I got to do because that Windows update kind of threw me for a loop because a lot of stuff on my chart didn't act right. So I'm hoping that this will come up and give me the what do you call it? The hedge.
Yeah.
If not, if it comes back down and pokes all the way through, then I'll be in profit. But I wouldn't mind doing a hedge. But we'll see. And I got to get this trade copy of things sorted out because I bet you that's why I can't open an account for some reason because I'm tied to those two live accounts. But that's neither here nor there. We will pick this up again tomorrow, and tomorrow we will do the 21-day trend. Okay, and that's where we have the 21 moving average on the chart. And we'll be looking for these inside bar trades and moderate candle trades.
And that's just on daily, Lou, is it?
Right now daily. But the same thing applies to the 4 hour because this extra couple of candles may clarify a pattern for you. But for now, daily. And the reason is that when I was working in the construction business, I had to leave the house at 7:30. I had to leave the house at 4:30 in the morning. And the only time I could trade was when I got home from work. And sometimes I was so tired. I didn't really have time. I didn't feel like sitting and watching 15-minute candles waiting for a trade. And I found that by setting up daily and 4 hour charts, I could set them up, go to work, and come home, and there'd be money there. Sometimes. Until I got it right. And then it got to be a lot more profitable. All right, and we're looking to keep around a 70% win rate with this. I should mention that also. All right, so we want to go for 70% wins, and our goal is going to be 100 pips a week. Now, there may be times when, because we're working with daily candles, we may not get that many trades in the week. This computer's doing all kinds of weird stuff. I never touched the mouse, and that window popped up. Okay, so keep that in mind. Like if we set because remember we sat in that we sat in this trade for 4 days before it actually did anything, and that can happen with the daily charts. Okay, so let's keep that in mind also. That's why I use 2 or 3 different ways of looking at the market. So one week maybe none of the wedges show up, but I get 3 price traps, or I may get 3 trend trades with the 21. So there will always be something in the mix. All right.
Are we no longer going to scalp during our sessions?
We're going to come back to the scalping, but I wanted to, I trying to do the 2 things at one time is how we ended up taking trades that,
Yeah, for sure.
weren't necessarily thought out properly. They were like rushed and hurried. So we will come back to the scalping because there's still a couple of things I want to cover there. All right. And the other reason for going back to the scalping too, Phil, was that on this trade, I think it was like the loss on those 2 taps was about $125, and on a standard account, that's 12 pips. Let's say it was $150. So I can go back to my scalping, and I need 15 pips on a standard account, and I've got all of that back. So it keeps me financially well in the race to catch these bigger trades. So that's why the combination of the 2 work pretty well together. And it's because of money management. Like I'll jump into this with a 0.1, but then when it really starts to move in my direction, I'll go from a 0.1 to a 0.25 and do a quarter of a lot for 50 pips. Then on the next pullback, I'll do another quarter of a lot. You know what I'm saying? So you can end up with a lot and a half catching that last 40 or 50 pips with very little risk. But it's something I'd rather show than talk about. So that's why I go in, and sometimes I go in these with a 0.2. I shouldn't always say that. I always do $1 a pip, but I'm doing that now because many of us are at the position where $1 a pip is the max that they can trade on their account, and in some cases even less. So I just want you to see you don't really need a lot of money to catch the long trades. It's kind of a misnomer. People think because they don't have a big account, they can't catch big trades. And Rob, that DF in that book you were talking about,
DG
rather, I think it was referring to another trading method or trading system. So in my mind, I just call it Darryl Guppy. Because if you read it that way, as if it was a different system, then it all makes sense.
Calling me a fish.
Something like that, yeah.
Okay.
All right. So, because in the few sentences prior to that, he does reference another trading system. He said, well, this guy saw things that were different than DG. So that's the way I interpreted that, and just let it sit that way. Okay, guys. I will see you tomorrow morning, same time, same place. Okay, and hopefully by Thursday and Friday we can jump back into the scalping a little bit. All right, but I want to get these things set up so we can all be on the same page and catch some of these big trades. All right?
Yeah.
Okay,
All right,
thanks a
have
lot.
great day.